Welcome back to Risk to Reward. Equinix sits at the center of global digital infrastructure, operating more than 260 data centers across 33 countries. Its facilities are designed to connect enterprises, cloud providers, financial institutions, content platforms, and networks within the same physical locations, enabling direct interconnection that reduces latency and switching costs. Equinix serves over 10,000 customers globally, including hyperscalers, large enterprises, and network operators, with the majority of revenue generated through long-term colocation and interconnection contracts. These contracts create strong recurring revenue visibility and high customer retention. Equinix generates approximately $8 billion in annual revenue, supported by consistent cash flows tied to mission-critical infrastructure that customers cannot easily replace. Despite this scale, global footprint, and predictable revenue base, Equinix shares trade below historical asset value benchmarks and at valuation levels that some investors believe do not fully reflect the long-term growth in data traffic, cloud adoption, and AI-driven connectivity demand flowing through its platform. Realty Trust operates one of the largest data center portfolios in the world, with more than 300 facilities across North America, Europe, and Asia. The company focuses on providing secure, scalable data center space to cloud providers, enterprises, and storage customers, with a business model centered on long-term leases. As a REIT, Digital Realty is structured to deliver steady, recurring cash flows, and its contracts often span multiple years, providing strong revenue visibility. Digital Realty generates multi-billion-dollar annual revenue and plays a critical role in hosting the physical infrastructure that supports cloud computing, data storage, and increasingly power-dense AI workloads. However, valuation multiples remain relatively modest compared with the durability of these cash flows and the scale of long-term demand growth. As artificial intelligence adoption increases compute intensity and data volumes, Digital Realty's global footprint and long-duration lease model suggest its valuation may not fully capture the infrastructure demand embedded in future AI and cloud expansion. CoreWeave focuses on AI-optimized data center infrastructure, delivering specialized GPU-dense environments purpose-built for artificial intelligence and high-performance computing workloads. Unlike traditional colocation providers, CoreWeave designs its infrastructure specifically around GPU clusters and accelerated computing, serving hyperscalers and AI developers that require large-scale, flexible compute capacity. The company has positioned itself directly within the AI compute supply chain, where demand continues to expand rapidly as model sizes and training requirements increase. Despite this positioning, CoreWeave shares have fallen more than 60% from prior highs as market volatility, capital intensity concerns, and broader sell-offs across AI infrastructure names compressed valuations. This decline has occurred even as demand for AI compute capacity remains strong, leading some investors to view the current valuation as potentially disconnected from the long-term growth drivers associated with AI infrastructure build-outs.